if we have an indication that the dollar's topped out too, and it starts to roll over, then you have the three things all happening at the same time, which is exactly what happened at the prior high on gold at close to $2,000.
Hey friends, thanks so much for tuning in. It's wonderful to have you back. As we gear up for 2019, I wanted to talk silver and gold, precious metals, real money, with the founder of First Majestic Silver. He's also the president and CEO of that company and chairman of First Mining Gold Corp. It's our friend Keith Neumeyer. Keith, welcome back.
Great chatting again, Sean, and you're right, it has been a while.
It's been a while, and it's been a tough 2018 for those of us that believe in honest money, people like you that mine the stuff out of the ground. I want to play an unsolicited soundbite for you from my friend Bob Kudla, who I just interviewed the other day. He's the founder of Trade Genius, and he was talking about 2019 being the year of precious metals and mining companies. And let me play this soundbite from Bob about First Majestic.
And we talk gold and silver, they may double, but the silver miners and the gold miners are going to go up 400 to 800%, Sean. We have data that shows it, and I traded that in 2011, and we lifted our accounts by 6 times during that period before they broke that bubble, and we're going to see that again. First Majestic's going to probably go from where it is now in the mid 5s to probably 10 or 15, maybe $20, and on it goes. And that's where the big money is going to be made. And when we go into an economic recession, we get an inverted yield curve, and then they panic out of it. That's when the dollar rolls over and these types of assets explode.
Yeah, I'll pause it there. I'm expecting good things in 2019 because we're seeing currency crises all over the globe. And I don't know what to tell you about precious metals. How much longer can this manipulation go on? Silver at $15 an ounce, it's just lunacy, Keith.
Well, hey, look, it's got through 15 today, or yesterday, and it continued that move today. So I have a small smile on my face, looking forward to 2019 and looking back at 2018 and 2017 with some, I guess, glee that they're behind us. Not that there was a lot of, it was more price driven than anything else. So we had a lot of great things going on in the business, but despite those efforts that we're doing within the business, with metal prices down the way they were over that period of time, it's hard on the share price regardless. This is where it becomes quite frustrating for us because we know we're doing a lot of really good things, and it doesn't show up in the share price, and then shareholders ask legitimate questions. Why is the share price not going up with all these good things? And we point to the silver price, and yet people just get confused with why that is such a manipulated metal, why it's so depressed, and why it just doesn't want to get a bid, and all these things. So it does make it quite frustrating. But hey, look, we're green, and looks like 2019 is going to be a much better year for us.
Well, Keith, yeah, I'm happy about the green too. But my God, what a year 2018 was, and not much better if you're into cryptos and Bitcoin. Bitcoin really took a bath. But what is the state of the precious metals market as you view it right now? You guys weathered a difficult year. Did you come out on the other end of it in better shape than many of your competitors?
Yeah, it's a good question. Going back to the other, commentary, when silver prices do what we're expecting, or what I'm expecting they're going to do over the next couple of years, it does have a direct correlation to the share price because we have about a 2 to 3 beta move to silver. So if you go back historically over the last 15, 16 years, you'll see a lot of these big moves in silver. For every dollar in the silver price movement, it often translates into $2 to $3 move in First Majestic share price. So that's really what he's referring to. But I look at more specifically to the metals, not so much the stock. I look at this time frame that we're currently in, very similar to 1999 to 2001. I think it's more than similar. I think it's almost identical. I haven't seen anything real differences. This is a grind lower. There's no one wants to take new positions on this close to the year end. So there is a lot of crystallization going on. People are trying to defend their bonuses and try to defend their performances for the quarter, for the year. So, this December has been really tough on a lot of these portfolio managers who rely on these, yields on their funds, in order to pay themselves bonuses. And so, they're trying to jack it up, trying to hold it up as much as they can. But, this is going to be an ugly January, an ugly February, as far as I'm concerned. And this is, going back to the top in the NASDAQ in March of 2000. I remember that time frame extremely well. You couldn't find a mining analyst. All the mining analysts of the day became fuel cell analysts, and I'm sure many of your listeners remember the whole fuel cell craze, back at the turn of the century. But that was quite the phenomenon. But today, it's forget about fuel cells. All the mining analysts have become marijuana analysts. So we have all-time highs hitting all, the NASDAQ, all the high-tech stocks, exactly the same as it did in 2000. We have a distracting technology like marijuana, versus fuel cells, which is sucking a lot of the speculative capital out of the market. And you got those two things combined, which are now crashing. And where's the money going to go? It's going to go exactly where it went back in 2002, when gold bottomed out at 250, silver bottomed out at $5, and over the next decade, silver went up 10 times and gold went up 8 times, and the stock market or the mining stocks, went up 5, 10, 20 times in some cases. So that's the kind of environment we're at the beginning of. At least that's my call, and we'll see if 2019 and 2020 turn out to be what I expect them to be.
Well, when I think Bob Kudlow was talking about the move he would expect to see in First Majestic and other miners this year, I think he's hearkening back to what we saw in, 2016, when we saw that breathtaking move in First Majestic. It went from about 5 to 16 in a heartbeat. I mean, it moved like it was headed to 50. And ultimately, when I think the breakout happens in precious metals, because of a dollar crisis or a crisis with any of the major currencies in the West, the yen, the euro, that's when we'll see these things really go to the values they deserve to be at. And silver specifically. Well, I should ask you, you're the CEO of the company. Where do you think silver should be if it was honestly priced per ounce, knowing what it takes to find the stuff and pull it out of the ground? And knowing how many dollars are in circulation on planet Earth, and how much debt, and how much derivatives, and how much funny money is out there. What should an ounce of physical silver be honestly priced at? Just your opinion.
Well, I think there should be a direct correlation between the amount of metals pulled out of the ground versus the demand of those metals, and compare it to other metals around the planet. The cost of taking an ounce of gold out of the ground versus taking an ounce of silver out of the ground, aren't that much different. And of course, it depends on the ore body, and it depends on the grade of the ore body, and the throughput levels and recovery levels. And there's lots of dynamics, that come to the actual cost of producing an ounce of gold or an ounce of silver. But from a general perspective, the worldwide mining industry is mining for every 1 ounce of gold, it's only 9 ounces of silver.
Yeah, and what's the silver to gold ratio now? 80 to 1?
Yeah, it's exactly. So what does that tell you? It tells me that silver is much rarer than people actually suggest it is, and that's all due to the banks, all due to the short position, all due to the people on Wall Street or Bay Street who just keep these metals in a certain tight trading range in order for them to manage these markets. And it's great for the banks, I guess, but it's not particularly great for these communities who rely on these mines for long-term sustainability.
I want to talk about your company, First Mining Gold Corp, too, because it's dirt cheap right now and you've got many assets in the ground. But, I wanted to ask you about palladium. I did an interview not too long ago with David Jensen, the writer and researcher. And David made the point that the palladium market is about ready to break. The LBMA and the funny way it handles these things with unbacked paper contracts is beginning to collapse as it relates to palladium, because the market for palladium is so tiny. And we're seeing palladium break out to really record highs here at this point. And I just wonder, in your mind, what does that palladium story and the LBMA manipulation and it's bending, it hasn't broken yet, but David's making the point that the LBMA could break over what's happening with palladium. What does the palladium story tell you about what could be the potentiality for silver and gold if we saw that same thing happen?
Well, that kind of tells me that the entire market is just headline driven and doesn't have a clue what really the supply demand fundamentals for these metals are. Um, I'm the wrong person to be asking about palladium because my view on palladium is actually quite negative. Um, a lot of people talk about palladium jewelry and so on, but if your girlfriend's wearing a silver ring versus a palladium ring, is anyone going to know the difference? I don't think so.
Right.
And of course, electric vehicles, that coming up don't use any palladium. So, nevertheless, how it applies to silver, I look at supply and demand fundamentals. That's the whole reason why I formed a silver company. The whole reason why I formed a copper company in the early 90s is because I'm a big believer that these metals are critical metals to what we're trying to achieve as the human race. Without silver and copper, we're done. We're not getting anywhere. So if you as an investor want to participate in this move, which is a generational move, electrifying the planet and going green and doing all the things we want to do as a human race, we're going to need a ton more copper and a ton more silver. So I've got a good copper. I've got a couple of good copper investments in my portfolio. I've got of course, first Majestic and a couple other things in my portfolio because of my thesis. I could be completely wrong, but that's my thesis, and that's where most of my net worth is sitting.
No, I think you're 100% right as it relates to silver. I mean, imagine the uses for silver versus palladium, where palladium's in catalytic converters and silver's everywhere. That's a great point. I want to ask you about the frailty of the market, the retail market. The bankruptcy of Republic Metals recently really sent shockwaves through the retail space. Premiums have really risen drastically. I know that specifically from talking to my friends over at SD Bullion, and they say people are nervous. APMEX alone, I think, had millions in exposure with that Republic bankruptcy. What does that event tell you about the fragile supply chain that exists for physical precious metals? Because as you and I have talked about before, you can't run down to your local Target or Walmart or your bank to get physical silver and gold. There are just a few places on earth where the retail guy can order those precious metals. And when those places start to go down, boy, I think that's just a powerful story. It tells us how fragile the market is. But your thoughts on the bankruptcy of Republic Metals?
Well, first off, it's a very unfortunate event. I know that company quite well. We've been doing business with them for a decade. And we've had a very, very good relationship with them over this period of time. But and we don't know all the details yet. The family's not come out and said, exactly what's happened. My view is there was some margin calls due to the fact that this is a very skinny industry. The margins are very, very tight. And, we saw what happened at Northwest Territories Mint, just a couple of years ago, located in Nevada. Similar kind of situation. The owner of that mint. It was a mint. It wasn't a refinery. Republic is both a mint and a refinery, but NWT was just a mint. But nevertheless, they would get metal into the door. The management would hedge that metal to make sure they didn't have the exposure, and because there was a time delay from the time the metal hits the gate to the time they actually produce an end product. So they need that protection over that period of time because they don't know what ultimately they're going to sell their coin at to the end consumer or bar. So that's the risk in the industry. There's about a 30-day delay there, and they have to bank that delay. So in the case of NWT, they went bankrupt. In the case of, unfortunately, RMT, Republic Metals, have also just recently declared bankruptcy. I think for the same reason. We've got exposure. Coeur d'Alene's got exposure. There's Tiffany is the largest. They've got exposure. It's really affected the entire industry on both sides, the miners and the consumers, because it was a big refinery. So all that metal is now being diverted to other places, and it has created some issues in the industry. We're looking right now to solve some of those issues, and we will come, of course, with some resolutions. But it was a shock to all of us, and it was a very unfortunate event.
Well, to me, it just speaks to the thinness and the fragility of the market. And to me, it also suggests that silver, that event alone should have caused silver to go to $20 an ounce. Because again, there's only so many places that the supply chain is so thin. There's only so many places to process the stuff and buy the stuff. All right, let me ask you this.
Well, unfortunately, what happens is all that metal sitting there gets used to pay back all the debts that the company owes, and who gets that metal at the end of the day, and what do they do with it when they get it?
Right. All right. Well, here's what I was going to ask you, and I want you to explain why in the world First Mining Gold Corp is trading around 20 cents, because you've got assets in the ground worth far more than the market cap right now that the company is worth. This is my opinion. I've done some research. As you know, I'm a shareholder in First Mining Gold Corp and First Majestic. Here's the thing. We have Steve Mnuchin, after the last market meltdown, calling around to Goldman Sachs, JP Morgan, Wells Fargo, trying to make sure that they're all okay and there's plenty of liquidity. We have Russia stockpiling gold. I think they added 31 million ounces of gold in November alone. Gold is real money. Silver is real money. For those of us that want to make the case for mining stocks, make the case for First Mining Gold Corp, as we see what I think is a tsunami, an economic tsunami headed to our shores.
And I completely agree with you. But it's just funny to listen to hear you say that. But and nevertheless, I'm sure your audience loves
Which
it.
part about Mnuchin? Because to me, here's the thing: the Mnuchin thing, going around to the banks and getting them to say, "Oh yeah, everything's fine." I mean, it's a little bit like the lady doth protest too much, right? Something is wrong with these banks, and I don't think Steve Mnuchin running around trying to calm people's fears necessarily is helpful. But my point is that our currency used to be backed by gold, and it no longer is. Russia's stockpiling the stuff, so.
Oh, come on. Like, he did a fantastic job. The Dow was up 1,000 points the next day. So like he did what he was supposed to do. So I'm sure he'll be getting a pat on the back for his calls.
Yeah, exactly. Well, look, I mean, these mining stocks have just been beaten up, and I just wanted your thoughts on any good news coming from First Mining Gold Corp, and give us the good news from First Majestic Silver too. I honestly think 2019 is going to be a big year for precious metals.
Look, First Mining Gold was put together at the epic bottom of the gold sector, the mining sector. And I came out because I put First Majestic together also at the bottom of the market down in 2002, 2003 when no one cared, and I put First Quantum Minerals together in the early 90s when no one cared, and I saw that same kind of environment coming to play, in 2014, 2015, where I was seeing assets that were just so stupidly cheap that I couldn't ignore them. You see a 1 million ounce gold deposit in the province of Ontario, which is one of the most mining friendly jurisdictions on the planet, sitting there worth $10 million. And you go, holy cow. This company spent 50 million just to develop the ounces, and or maybe even more in some cases. I'm just throwing a number out. But give it to just for your listeners as an example. But this is the type of valuations that we were seeing. So we started buying up these assets, and we were paying $8, $9, $10, $11. I think was the most we ever paid for an ounce of gold in the ground. And over a period of 15 months, we bought 8 companies. I've never seen a public company ever do that in any industry in my lifetime. And of course, I orchestrated that. I pushed it along, financed it through the entire period of time, and the company got quite large. All of a sudden, we've got 26 assets. We don't really have the staff. We start having to staff out, and it's a totally different company. It's now no longer this acquirer of assets. It's now this incubator, this manager of this portfolio. It's got to try to modify or try to create some wealth and benefits of this portfolio for shareholders. And so we started going down this path of developing these assets. We had to change out management, and that's created some disturbance in the market, created some confusion in the market. We just now recently got a brand new CEO. He starts on January 7th, which we're really excited about. He's an ex-banker. I think he's going to do a top-notch job. But there's a big portfolio of stock. We got 13 million ounces, over 5 major development projects in Ontario. There's not a single junior gold miner, I believe, in the sector that has a portfolio that comes even close to First Mining Gold portfolio. So I'm excited about it. The market's obviously beaten up quite a lot. It's trading at all-time lows. We took it public at 25 cents a share. I think it closed at maybe 23 or 24. yesterday or the day before. I didn't look at it today, but it's in that range. So it's basically back to seed level. And you'll see insiders buying stock over the next few weeks. And, we're dedicated and committed to, developing these assets. So you'll look for news for 2019.
All right. And guys, the ticker on that, if you're interested, is FFMGF. I think I have that right.
Yeah. And FF in Canada, of course, or on the Toronto Stock Exchange.
Yeah. And the ticker for First Majestic Silver is AG. Hey, let me ask you this.
That's an easy one.
That's an easy one.
That's the NYSE tickers. That's our. I'll tell you that used to be the Agras, the agricultural company. We actually grabbed it just as we got our listing in New York. So it was one of the most exciting things that we've done, because that symbol is obviously pretty key.
Yeah, that's a cool symbol. And hey, it's a great company. And let me ask you this though before we let you go. So President Trump has called the Fed his greatest threat, right? Because they continue to raise interest rates. How does a environment with rising interest rates generally affect precious metals and mining companies? Obviously, the debt costs more to carry in an environment of rising interest rates, and that's what President Trump is concerned about, is more interest even on our national debt. But rising interest rates, how does that typically affect gold prices?
Well, it's not the interest rate that you have to worry about. It's the real interest rate that you have to worry about. So it's the difference between inflation and interest levels. And because that's the real interest rate. So if you have rising inflation and rising interest rates, it's basically almost a neutral effect to gold. If you have rising inflation and lowering interest rates, that's positive for gold. If you have dropping interest rates and flat inflation or increasing inflation, that's also good for gold. So it's not that much of a simple answer right now. There's what's holding back gold is the strong U.S. dollar, but we've got dropping rates and increasing interest rates. So if we had the third pillar fall, which would be the U.S. dollar dropping, gold will explode. But what's been supportive over the last couple of quarters is this new phenomenon where the institutions are now waking up to the fact that the Fed actually may be slowing their interest increases in 2019, and that's being priced into the market. And there's also a potential perception out there that this flood of capital is circulating out there is actually going to start impacting inflation rates. And we've seen some small upticks in inflation around the world. So that trade is now in its infancy. If those two trends continue, that's going to be extremely supportive for gold and silver over the next couple of quarters. But at the same time, as I said just a couple of minutes ago, if we have an indication that the dollar's topped out too, and it starts to roll over, then you have the three best things all happening at the same time, which is exactly what happened in the prior high on gold at 2,000, close to $2,000.
All right. Well, one thing we know for certain is the national debt is not going to decrease anytime soon. And in fact, I'm being facetious, guys. The debt will continue to only go up. And ultimately, the more dollars they print, the less each one is worth. And ultimately, gold is your ultimate asset against a currency collapse. Silver, too, in physical form. That's my take. Silver and gold in physical form, Keith, all day long.
Yeah, and First Majestic has we sell our own silver on our website. People should look at it. It's beautiful. It's like super cheap. It's probably one of the smallest premiums that I've seen out there. So have a look at that. Your comment earlier about Republic not being able to supply metal. Well, we've got inventory, we've got metal, and it's there. So if people want it, go have a look at the products. And of course, I'm available on Twitter. Just look me up, Keith_Neumeyer. I don't do a heck of a lot on Twitter, but feel free to go there when you care to. And First Majestic Silver has got a fantastic website, First Mining Gold. Look for news on its gold assets in 2019, but of course, go look at the website as well. Both those presentations are updated regularly, so please have a look at them before you make any investment decisions.
Yeah, absolutely. And I do like the way you frame it up, though, with First Mining Gold Corp. You call it an incubator. And I love that. It's an incubator of precious assets, precious metals assets. That's cool. That's a great way to frame it up. And First Majestic Silver. So the tickers are FFMGF for First Mining Gold Corp and AG for First Majestic Silver. And our guest has been Keith Neumeyer, the founder of both companies. Keith, thank you so much, and I hope you have a wonderful, happy new year and a prosperous 2019.
Hey, Sean, I'd like to throw in one other comment.
You betcha, please.
And I should also say, when it comes to the first mining acquisitions of the 8 companies over that 15-month period, if you look at the market cap of those 8 companies at the peak of the market, which was, of course, back in 2011, 2012, the combined equity value of those companies was in excess of $1 billion. There was one company that actually had a takeout offer for $250 million, which never went through because the market just took off from the time that offer was actually put in place. So, we're currently trading at somewhere around 150 million, and I think there's a huge value just to look back at 2011, 2012, and these assets are actually even better today than they were back then because we've been developing the assets through drilling and development.
Yeah, that's another great way to measure the value of the company. All of these assets at one point, folks, were worth more than $1 billion. And right now the market has them, I think, wrongly valued at around $150 million. All right, Keith. Well, thanks so much again. We really do appreciate it, and have a wonderful 2019.
Okay, Sean. Well, great talking to you again. Hopefully it's not another year before we speak again.
No, let's get you on again, and we'll get you on with good news, because seriously, I think silver's headed to 20 and gold's probably headed to 1,500, and it should be an interesting year, to say the least. And guys, again, our guest has been Keith Neumeyer. Keith, thanks a lot.
It'll be funner to have an interview when silver's $20, that's for sure.
That's for sure. All right, guys, thanks so much for tuning in. We very much appreciate it. And for Real News 24/7, do check us out at sgtreport.com. God bless. Bye-bye.
Wow, it's been since, December 22nd that these people have put anything active on social media. That's kind of a long time for them. And I asked these same sources, is this a direct correlation to what occurred at the Bush funeral? And I was told yes. The word I have heard is that several months ago, George W. Bush had been in contact with Trump, but essentially flipped.